You read the rules when you sit down and play a board game. True skilled poker players would say, I'm not gambling. It's a skill. I know the rules. I know the odds. And these are rules that you can learn. And then you can change your investing strategy and your business strategy based on these rules.
Welcome back to the Daily Coach YouTube channel. Today I want to introduce a new but very good friend of mine, Chris Larsen, to the Daily Coach YouTube channel. Chris, welcome to Kim Daily TV.
Kim, it's always great to see you.
It's so fun to see you today too. So guys, Chris is the very definition of the Daily Coach's favorite candidate to work with. So he has an engineering background and an MBA. That is a perfect combination to own a business, let me tell you. Then the guy goes on and has a great sales career in medical device sales. I mean, he's analytical, logical, and he can sell. He's not going to get paralyzed by his own analysis paralysis. The guy goes on, he starts investing in real estate at 21 years old. Now he just tells me today he's been involved in over $500 million in real estate acquisitions. He's going to tell us today how not to trade our time for money. So,
Absolutely.
Chris Larsen, let's go. Tell us how to stop
Yeah.
working for the man and how to get our money working for us.
Yeah. So I think the most important thing is mindset, Kim, because we're not trained. I was a good student. I was blessed with a little bit of intelligence, and I always say I wasn't smart enough to really be an engineer. And my counselor pulled me aside in college and said, "Chris, you got too much personality, and you're not smart enough to be an engineer. You should look into sales." So I ended up not. I got the PE. I passed my PE exam. But the cool thing is, engineering really teaches you a thought process, right? And it teaches you how to make assumptions and how to go through that. So I'm very thankful to have that. But you're right. I think a lot of people are stuck in that analysis paralysis. They're going through the numbers, trying to see if it works. And I forget where I read the quote, but it was in I think it was in one of the famous business books, how great companies were built. And it talked about great leaders, they don't make all the best choices. They just make quick choices and figure out what works and what doesn't. So I started incorporating that into my life and saying, okay, I want to make the right choice. I certainly do. But if I can just be right more than 50% of the time, but if I can do 2, 3, 4 times the amount in the same amount of time that most people choose one action, I'm going to be massively more successful. So I think that's the big thing. If you have the right mindset and you say, okay, I don't have to always be right, but I have to take massive action and just be right more times than not, you're going to be successful.
I know you're really big into multifamily investing, right? So
Absolutely.
why do you think that multifamily investing is sort of like the Holy Grail?
Yeah, so I call it the Holy Grail because I bought my first property at 21. I had all these single family rentals. I managed them essentially myself. I had property managers, but if you're listening and you've had a rental, you know that they don't really manage themselves, even if you have a property manager. It's like, oh, hey, do you approve this hot water heater repair? Oh, hey, your tenants that moved out destroyed your carpet or whatever it might be, or there's a water leak, or they can't pay their rent. Do you want to start the eviction process? I remember having a call with one of my quote unquote managers on my honeymoon, and I'm coming up next week on our 15-year anniversary. So 15 years ago, I remember having this conversation, and it was when there was hotel phones. We didn't have cell phones, so we could travel internationally, and I was paying like $23 a minute to talk about, am I going to evict this tenant that I had
On your
and I'm just
honeymoon
like
of all time.
on my
That's not
honeymoon
good.
in a
Yeah.
robe looking out the window in Costa Rica.
Yeah.
So at least I had that going for me. But I did it. It was fine. But then I realized over the course of over a decade, Kim, that managing these, it wasn't the best use of my time. What I found was it wasn't the best use of my money either. I had all this equity built up, and I was getting like a single digit return, and then I was paying taxes. So the reason I call multifamily the Holy Grail of real estate is because it gives you the ability to scale. It's a lot easier to manage because you can actually have property managers that are on site, that are actually truly professionally managing these properties. There's less risk because if you think about it, if you have one tenant and they move out, your vacancy is 100%. If you have 300 tenants and one moves out, your vacancy is 1/3 of a percent, right? So it's a lot less risk from that. They're very stable investments, and we even saw that during the pandemic last year in our portfolio. Our core portfolio of high quality properties here in the Southeast, our collections were 98%. So you add all that up, you look at the returns, you look at the ability to passively hold them, and you look at the risk and the risk versus returns. I call it the Holy Grail. I kind of stole that from an investor by the name of Ray Dalio, who's become really popular over the last decade. But all those reasons and a few more why I call it the Holy Grail.
You know what I'm hearing you say. So, as the franchising expert, I'm touting the biggest advantage of owning a franchise is that you're in business for yourself, but not by yourself. Franchising is collaborative. You have a team of people. You're not reinventing the wheel. You're not figuring it out on your own. And it sounds to me like multifamily syndication is like exact parallel with a real estate investment. True?
True, and I think even more so in the fact that I tell investors like these apartments, they're valued like businesses. So if you're listening, you've talked to Kim or you've looked into owning a business or a franchise. The cool thing is if you grow the franchise, not only do you make money along the way, but you create value, right?
Yep, you have an
So that
asset.
exactly, you have an asset. You have that net operating income that you have control over, and as you grow the profit of that business, you grow the value of that business. And apartments the same way. As you grow the profit of that apartment complex, you grow the value of that apartment complex. And I always tell investors, hey, you're not just buying a piece of real estate. Think of it as you're buying into a business. And that's how we have control over the value instead of a single family rental that you just kind of hope it goes up in value. You have some control if you fix it up, but really the value of a property that you purchase, a residential property like a house, is valued based upon what your neighbors' homes are based upon, not the actual profit. So yeah, it's that's what we do. We work with investors just like you. We partner with our investors. We work together, so we're not investing all alone. It's a team that we're working with. We have property management teams that we work with. We have a plan that we've executed multiple times before, just like a franchise. You guys have plans and it's structured, and you don't have to go alone. You don't have to go it alone. And I think the last piece is you provide value as a franchise or and then the franchisee, there's exchange of that value. You give up a piece of the profit. The same thing. We work with our investors. We manage it. We provide that value. They don't have to. They can actually totally passively be involved, or they can learn about it. But we take a piece of that, and they get the majority of the profits, which is nice.
When we talk about how 90% of millionaires own their own business because they are not working for wages, they're building cash flow, they're building equity, and they are creating tax shelters. So talk a little bit about the tax advantages of multifamily
Ooh,
syndication, as well.
yeah. Oh, yeah, this is a great one. And yeah, if you look at the top, Forbes 500, the richest people in the Forbes 500, something like 15% are from real estate. So it's you just said it. It's no secret that if you create your own business, that is a phenomenal way to create wealth, right? We know about Elon Musk, we know about Jeff Bezos, Bill Gates, all these billionaires, right? But there's also people like Sam Zell, people that have built their fortunes as billionaires on real estate. So, then you hear about people like Donald Trump who didn't pay any taxes. You hear about, Jeff Bezos who doesn't pay any taxes. And you say, well, why is that? Is that because they're cheating? What are they doing? I say, and if you look at the cover of the book, it's got this on here for a couple of reasons. It's got the Monopoly pieces. So if you went and you played Monopoly, would you sit down and not read the directions and start playing? No, you would read the rules, right?
No,
Maybe you do. Or you're like,
I
oh,
wanna
I'll
own all
trust.
the homes on Park
e-
Place.
Exactly, but you want to know the
For the
rules, right?
hotel.
And
I wanna own trade in the
you
homes
want
for
to
the hotel.
exactly, and we do. We trade home. I traded homes for a big multifamily apartment complex. So the red, it could be a hotel, it could be an apartment, but yeah, own the hotel, own the bigger, more efficient properties. But the point is, like, you read the rules when you sit down and play a board game. You sit down to a poker table. You're not going to gamble or poker. Real true skilled poker players would say, "I'm not gambling. It's a skill. I know the rules. I know the odds." Right? if you sit down and you don't know the rules and you don't know the odds, now it's gambling because you're taking this massive risk because you don't know what you're doing. What business owners and real estate investors know is that the IRS has written rules, and these are rules that you can learn, and then you can change your investing strategy and your business strategy based on these rules. And most people complain about the fact that they pay too much tax as a W 2 employee and how Jeff Bezos or Warren Buffett or Donald Trump doesn't pay enough tax. Well, is it their fault that they learned the rules and figured out what the IRS does?
They're just
And
playing a
I always
better
say
game.
exactly. And what really bothers me is when, those people say, "Hey, we should pay more tax." Well, they can always take out their checkbook and they can write a check to the US Treasury and send it in. So I always ask people, "Oh, you think you should pay more tax? Have you ever sent a check involuntarily to the US Treasury?" The answer is probably no, right? So
No,
if you
I
own a
just paid
business,
taxes yesterday. No,
yeah.
no one
So
does.
if you own,
Everybody does it begrudgingly. No,
right,
it's good. It's
exactly.
good. It's
Yeah.
good.
And it was,
Just
yeah,
glad you're doing well.
it was filing deadline yesterday. But what business owners know, and if you're listening, you own a business, you know this, you can take expenses before you pay tax. And this is like a Robert Kiyosaki, Rich Dad, Poor Dad fundamental. Business owners get to pay expenses before they pay tax. If you're a W 2 employee, you get paid, you pay tax, then you pay your expenses. Okay. That's what the middle class gets screwed, to put it bluntly, on. It's the same way in real estate because remember, real estate, we're buying businesses. So what we get to do is we get to pay all these expenses. But here's the cool thing: one of the expenses in real estate is depreciation. So the government, the IRS, says, okay, if you buy a property, if it's a house or an apartment building, it's going to depreciate over the course of 27 and a half years. And what that means is if you buy a property and it's $275,000 depreciated on a straight, quote unquote, straight line basis over 27 and a half years, that's $275,000 value of the building divided by 27.5. That's $10,000 per year of depreciation. Does that make sense? So if I make $10,000 a year in profit off of that property, I can offset it 100% by that $10,000 of depreciation. And I don't have to pay tax that year. Now, there's some rules like, you have to, you can't always get away with that. Like if you sell the property, you make a big profit. At some point, the IRS is going to say, yes, you owe tax on that. The cool thing about being a business owner or an apartment investor is that we have accelerated depreciation. So businesses, one of the neat things is there's certain property like big trucks and equipment that you purchase, you can depreciate 100% of that year one. You
Right.
can
We
do the
talk
same
about
thing
that
in
in
apartments.
franchising. Yeah. Yeah. With some of the
Exactly.
businesses I represent. Hmm.
Exactly. So again, how great is it as a business owner or a real estate investor that you get to take expenses before you pay taxes, but then you get to take what I call in my book phantom expenses. Like depreciation is a real thing, but it's only on paper. Like I'm not actually losing money when my property depreciates. My property actually, we just talked about earlier, should be appreciating in value. So it's almost like magic that you can make profit, you can increase the value of the property, and then the government tells me as an investor, I'm losing money and don't have to pay tax that year. Pretty good deal.
How does someone become an accredited investor with you or get
Mm.
into your investing group? What's the minimum amount of investment? Like, what are some of your criteria, Chris?
Yeah, so I just mentioned Robert Kiyosaki, Rich Dad Poor Dad, and when I read it over 20 years ago, he talked about the importance of being what's called an accredited investor, and this is a guideline that the SEC lays out and says to be accredited, and this is just it's like you're pregnant or you're not pregnant. Okay, it's like you're accredited if you make $200,000 or more, you've made it for the past couple of years and you plan to make it in the future as an individual, $200,000 or more of income, or as a combined couple, $300,000 or more a year, or you have $1 million of net worth, not including your primary residence. So two or $300,000 of income or $1 million of net worth, not including your primary residence. So most of our investments are limited to accredited investors, and this is a SEC guideline that we follow for our investments. And we make it as simple as possible for investors to qualify. or I should say, prove that accreditation. We have a third party service we use, or if you have a CPA or a financial advisor that's qualified, they can also sign a letter and state your accreditation status. And typically, our minimums, our investments are about $50,000 for these. So if you're listening and you're not accredited, I talk about in my book, step one, have a business, have a high income profession that you're really good at, get good at it, make a lot of
Business,
money.
the daily
Like,
coach.
yeah, call Kim. If you're in a career, where look, a lot of engineers are in this position where, engineers make good money, but they don't make great money, unless they own a business typically. Like a high paid engineer typically makes six figures, like maybe 100 to $200,000. But it's pretty hard to become accredited if you're a professional like that. So find, either find a business that your spouse can own, that you can own, that you can multiply your earnings. I think that's the first big step, is to figure that out. And that's why, Kim, that's why I had you on our show, because I think it's amazing.
In franchising, there are those semi-absentee investments that allow
Yeah.
you to have that W-2 job and still, with 10 to 15 hours a week in the beginning, kind of getting it up and running, making sure you've got the right
Yeah.
manager in place, and then maybe
Yeah.
scaling that back even more beyond that. So you definitely
Love it.
can straddle
Yeah.
both worlds. I like it just in terms of building your business acumen, your confidence, an investment where you're, again, leveraged through a team of people in a franchise, and you have the mentorship and training, and you don't have to have the experience in order to be successful, which is exactly what Chris does. His criteria may be a little bit higher financially than an entry point into a franchise, but that's why we love each other, because we can feed each other. I mean, I can create people that become accredited who can then go on to become multifamily investors, and he has, people that are accredited multifamily investors who are looking for diversification into businesses. So there's a lot of synergy here, which is why we've been on each other's shows. So yeah. So okay, so 50,000. Now I have a question. This is kind of a personal question, because of course, I've met many of your amazing people, and I've helped many people who are invested in infinite banking policies, who have multifamily real estate, again, who are looking for diversification. And I just ask them, when I see significant net worths, and they're like 38 years old or 45 years old, and I mean people with like 5, 8, $10 million net worths. And I ask, okay, so how did you get there? And there's different strategies. There are some people who say, I go in at the minimum level on every deal that Chris would offer, $50,000. And then other people are like, no, I'm all in on two or three. Like, do you have strategies in your book like that? Like, what is your preferred, are you all in, or do you like
Yeah.
50,000 here, 50,000 here?
Yeah, so I think there's kind of two buckets. And first off, I'm not a financial advisor, so if you're listening, you have to make your own choice, for yourself. But really, I find that investors kind of fall into two buckets, Kim. So it's kind of, and I'll talk about like what I employ as my strategy, but it's an allocation strategy, or it's a kind of a time strategy and an income replacement strategy. So here's what I mean: we have investors that they're retired, they have, like, they're some of those numbers that you just threw out there, 5 million plus net worth. And they say, hey, Chris, I have, high net worth. It's tied up in like 401ks, IRAs, which, by the way, you can invest through an IRA. So that's something that we probably have 20 to 25% of our investors invest through what are called self-directed IRAs. So that is possible. Let's say you have $5 million and you say, hey, I want 20% of this. I want $1 million in real estate because I want to invest like the rich. I talk about that in my book. The ultra rich, those that are worth 30, 50, $100 million, they have 20 to 30% of their net worth typically in income producing real estate. So that's the first thing. So you say, hey, I'm going to do, say, 20%. So they may take that $1 million and put it across, 4 or 5 investments. Then you have individuals, and this is what I did. I started about 10 years ago, and I said, all right, I'm going to invest about $100,000 a year in these syndications. So for me, if I was investing $100,000 a year, I would probably split it into 2 syndications per year and kind of dollar cost average, if you will. And if you do that consistently over 5 or 10 years, you're going to build up a substantial amount of money because these investments are growing in value. They're selling every 3 to 7 years. The value of your investment goes up. You roll it into another investment. A lot of times you can do that tax deferred, so you can let that money continue to grow
1031
tax
exchange.
deferred. Yep, exactly.
1031
1031
exchange.
exchanges. Love it.
I picked that up
Another
along the interviews.
Absolutely. A wonderful
The
strategy
daily coach
that it
learns by talking to all
yeah.
these amazing people.
Well, and the thing is, again, the IRS, the government says, hey, we want you to reinvest that money and continue to grow and provide, incentives and capital to the economy. So instead of paying tax and sucking that out of the economy, multiply it, roll it forward. The government wants that. Okay. They want people to have families and grow. They want people to make money and grow their money and invest it. So the government wants you to do that. So I find there's two different ways, and you can also reverse engineer that. So if you said, "Hey, Chris, I want 6 figures of income from these investments," we can figure out about how much you would need to invest over a period of time to do that. And all those things that I just mentioned, those are conversations I've walked through with investors, and then they can make the decision, on their own or with their professionals, and say, "Okay, this is how much I'm going to invest at once over how many investments or over a period of time." And I think it's a great idea to diversify to a degree. Like I would never advise an investor to say, "Hey, put 100% of your investable capital in one asset." Really in anything. If you're a business owner, you may just by virtue of that have a tremendous amount of net worth tied up in that one investment, like a business. That's a little bit of a different situation, though.
But it's the same advice. So your role in real estate syndication is exactly what the Daily Coach does in helping people figure out the options for them for the business options. So I'm not a broker. I don't have a license to sell a franchise. I'm like the eHarmony of franchising, right? So you bring the criteria you're looking for. I have the relationships with the franchise. I present the opportunities, and the candidate picks for themselves the right investment. The second part of what you said that's equivalent to what I do is look, the wealth is always created through scale. No one location or one territory of a franchise is really going to make anybody wealthy. It's the foundation. You can't get to two or three without number one, right? So you get in with one, and then as you grow, you then decide to grow with the same franchise and scale to multiple. Maybe you come in with a multi-unit mindset, and you commit to three territories right up front with a development agreement to build them out over time. So there's multiplication within the same system, and then there's owners who have one or two territories of this franchise and one or two territories of this franchise. So it's kind of, your answer was like, I get it, because it's kind of the same thing and it's not my job to tell people the best way. It's for them to feel out for them what feels natural and good, for their risk tolerance and for what they're trying to accomplish.
Absolutely. But yeah, scale is, I mean, you said it, scale is super important.
Yeah, this is so fun. So, we're going to leave your contact information below in the description
Okay,
so anybody can reach out to you. Are there any
please.
other like highlights or golden nuggets from that next level income book that's coming out that you want to share with the viewers today as a reason
Yeah.
for them to buy it?
Yeah. So first off, if you're listening today, you don't have to buy it. You can go to nextlevelincome.com and click on the book link, and I will actually send you a copy for free if you put your address in on that book link. So if you're a listener here, go on there, nextlevelincome.com, click on the book link. And what it is, it's a fairly short read. Remember, I have an engineering background, so I wrote it like an engineer. It's less than 100 pages. You should be able to read it on an hour and a half flight or over the weekend. And really, it's like the shortcut of what I learned over the past 20 years of investing, how to structure your finances using things like infinite banking that you mentioned, Kim, talking about the different areas of real estate and why I love multifamily. And then ultimately, if you don't have the time, or let's say you are a franchise owner and you say, hey, I also want to be involved in real estate, how you can do both and make it work for you.
Guys, I really encourage you to reach out to Chris. This has been an awesome conversation. You've given us so much golden nuggets, so many golden nuggets. I learned a couple of things myself on this conversation. So thank you for being my guest today, Chris.
Oh, it's been an absolute pleasure, Kim. Thanks for having me.
Yeah. Hey guys, I hope that you will take advantage and learn. Just it's all about keeping an open mind and exploring to figure out what is the right investment for you or the portfolio of investments. Maybe it is a combination of a franchise with multifamily syndication. So reach out to one or both of us if we can help you. We definitely would like to try. Thank you for being on my show today. Thank you for being my audience today. And until next time, I am Kim Daly, and I want to be your daily coach.